What if I told you you're already doing one of the best things possible to build wealth for your future and you might not even be realizing it? Yes, if you're contributing to a retirement account like a 401k or an IRA, you're on a path that many successful investors swear by. Today, I'm going to dive into a concept called dollar cost averaging and the set it and forget it mentality that can be your best ally in building wealth. And trust me, the power of these strategies in navigating ups and downs of the stock market will have you looking at your retirement account in a whole new light. So let's start with the concept called dollar cost averaging. Imagine you're setting aside $2,000 a month in your 401k. Now, for simplicity's sake, let's say the S&P 500 index is trading at an all-time high of, let's say, $4,000 a share. You're able to buy 1/2 share of the S&P 500. But let's say the stock market tanks down to $2,000 a share. Let's say the S&P 500 is trading at $2,000. Well, guess what happens with dollar cost averaging? That same $2,000 that you're using to invest monthly can now buy 1 share, not just a 1/2 a share. This means the market went on sale, which probably means something kind of bad is happening. But it's one of the best ways to illustrate the idea of dollar cost averaging. The same amount of money of $2,000 a share invested in the stock market, you're actually buying on the dips. Now, there's a lot of volatility obviously involved in the stock market, but if you focus in the long run, you can navigate this risk really well. Now let's embrace the set it and forget it mentality. It's all about understanding that the market has cycles. Ups and downs are inevitable. But historically, despite these fluctuations, the market trends upward over the long term. By continuing to invest regularly without trying to time the market, you're leveraging time and consistency to your advantage. Remember, this journey is about patience and perspective. The goal isn't to outsmart the market. It's about allowing your investments to grow over time, capitalizing on the power of compounding and market recovery. So whether you're navigating a bull market or weathering the storms of a downturn, your steadfast approach is building a foundation for a secure financial future. Thank you for tuning in today. And if you're contributing to your retirement, stick with it through the market volatility. And you're already applying one of the most powerful wealth building strategies out there. For more insights, please like this video and follow me for more insights on your financial journey. Thank you.